Hello everyone, welcome to our weekly outlook. Let's break down what's been moving the markets and what to keep your eyes on next week. Let's kick off with the US job openings that stayed flat in June, around 7.4 million. Consumer confidence bounced back a bit after a rough spring, but we're still not at last year's highs. The private sector added 104,000 jobs in July and pay is up 4.4% year on year. Not that bad. GDP came in at 3% for Q2, mostly thanks to a big jump in trade, but consumers are still cautious. Construction is slowing and investments are taking a breather. Pending home sales down 0.8% in June, and the Fed, no surprises, they held rates steady at 4.25 to 4.5, even though two members wanted to cut. Over to Europe, the eurozone barely grew, just 0.1% in Q2. Germany actually shrank a little, down 0.1%. President Trump signed off on new tariffs set to kick in August 7th. Buckle up for that. China's manufacturing slowed again in July, PMI at 49.5. Exports are struggling, prices are down, and job cuts are happening. But South Korea had a bright spot. Exports jumped nearly 6% in July thanks to strong demand for AI chips and a new trade deal with the US. And now the top movers. And the top gainers and losers among the stocks. Now, what's ahead for next week? On Tuesday, the US ISM services and Canada's trade data are due. On Thursday, Chinese trade numbers and the Bank of England rate decisions are up. And on Friday, we have the Canadian jobs report. And don't miss these earnings reports. On Monday, we have Lowe's, BioNTech, Tyson Foods. On Tuesday, we have BP, Caterpillar, AMD, Pfizer. On Wednesday, we have McDonald's, Disney, Uber. On Thursday, we have Sony, Gilead, and Toyota. And on Friday, we have Canopy Growth. That's a wrap on this week. Markets are moving fast, so stay sharp and see you next week.